Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the upcoming earnings season and taking a look at what happened in the last earnings and at some popular stocks. We'll also give our view on where stocks might go from now, focusing on the potential trading opportunities that this earnings season represents. My name is Sasha and I'm a financial analyst from the research department at Fortrade. If you have any questions, please call and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now let's talk about market opportunities. If you don't know what they are, allow me to explain. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with the simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand it's solely your decision whether you trade on market opportunities or not. So here's an example of a recent market opportunity. You can see fundamental analysis on what's going on with the euro-dollar currency pair. You can see that this is a downtrend opportunity over a weekly period, since our analysis suggests the euro would decline in value against the dollar. At the top, you can see some geopolitical events and fundamental analysis that can influence the euro-US dollar currency pair. For example, the part on the EU and its disagreement with the Italian government over its budget, which has put pressure on the euro. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches 1.1381 that you can see on the right-hand side of the screen here, that's on the left-hand side of the screen here. This shows the right moment in our estimation for opening a trading position, had you decided to trade on this market opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further along. At these points you can put a stop loss and take profit, and further down you have calculations. If you close the position using take profit, you can expect these kinds of profits at these support levels in green. If the price is going against you, then you could potentially have a loss of this amount at the resistance levels in red. Finally, profit and loss calculations are based on a one-lot trading volume. So what is the earnings season, why is it important for traders, and how can you trade it? Earnings seasons are months of the year when a majority of quarterly corporate earnings are released. Earnings seasons fall in January, April, July and October. For traders, this means that almost every large company on the market will report their results in these months, and this can have a great effect on the prices of the stocks you trade with, providing a great trading opportunity. The two statistics that are usually considered the most important are revenue and earnings per share, and investors will be hoping for a beat. This is a statistic higher than expectations in both categories. If this happens, a boost in the stock price is more likely. But watch out for what investors call guidance. These are projections for the future. Most large companies hold press conferences after results are published where the CEO talks about the future prospects of the company. A positive outlook tends to influence the company's stock price higher, and negative noises about the future will bring the price down. As an investor, you should keep an eye on analysis and price targets, which will give valuations stating whether the current price of a stock is overvalued or undervalued before that company reports its earnings. You can of course request such information from your senior account manager. When do the big companies report? As always, the big banks kick off the earnings season, and this July the big guns begin to declare their earnings on Monday next week, with Citigroup JP Morgan and Goldman Sachs leading the pack early on, and with Morgan Stanley reporting towards the end of the week. But many giant companies including Apple, Alphabet, that's Google, and Facebook are expected to report their results towards the end of July, and the earnings season will go on until mid to late September. So what do company results show so far? Well, so far only smaller companies have reported, but of the few S&P companies that have reported results, 90% report above expectations earnings and 65% better than expected revenue. This is only a small sample though, so this statistic will change and we will know a lot more by the end of this week. But we can talk about what happened last quarter and what analysts are expecting this season. First quarter results from the S&P 500, that is the USA 500 index, showed that earnings were in line with the 5-year average, with 76% beating earnings per share estimates and 59% beating revenue estimates. It was a good earnings season, but it couldn't match the 3 previous excellent results. However, investor expectations were lower, so the results generally continued to boost the USA 500 to a record high at the time, at the beginning of May. But let's take a look at some of the most popular stocks and how they performed last quarter, Apple and Tesla, and see the reaction of their stock prices. Both stocks have experienced volatility, although Apple has performed far better in recent months. For years, Tesla has been a firm favorite for traders, but since the end of last year until June this year, the stock has been in a downtrend. When earnings were announced on April the 25th, showing that both earnings and revenue were worse than expected and reporting a loss of $702 million, the stock slumped by over 5%, as you can see here, setting off even sharper losses until recently. In January, Apple cut guidance, warning that sales would turn lower due to the economic slowdown in China, but its price pushed higher, jumping from $155 at the beginning of the year to $215 following Apple's earnings results on the 30th of April. Apple's earnings and revenue were above expectations, although revenue was down from the same period last year, mainly due to slowing sales of the flagship iPhone. But guidance for the next quarter was higher than analysts expected, which boosted its stock price, which grew some 5% in extended trading. However, the stock has fallen since then, as it became clear that the company could be a target in a trade war. But Apple's fortunes in terms of its stock price have reversed since June the 6th. So what can we expect this quarter? Well, as I already mentioned, we are not expecting great earnings seasons of previous quarters. According to FactSet, some 77% of 113 companies have warned that their earnings per share numbers will be worse than Wall Street analysts are estimating. But this management of expectations is probably a good thing, since expectations were lower for the last earnings season, but companies still did very well compared to those lower expectations. For S&P 500 companies, the average estimated year-on-year revenue growth rate for the second quarter of 2019 is 3.8%, while analysts expect a decline in earnings of minus 2.6%. When talking sectors, the utility and healthcare sectors are expected to report the highest earnings growth, while industrials and IT sectors are expected to report the most decline, with semiconductors and tech hardware doing worse than other IT companies such as Facebook or Google. What impact can be expected upon stocks? This obviously depends on results, but the three main factors to look at are earnings per share, revenue, and forward guidance. But in some cases, traders look for other numbers. In the stocks we looked at, Tesla is a special case. Although orders are a closely watched figure, the company historically has had a problem with delivering their product on time. Until recently, Tesla has had a bad year, with the stock sinking almost 30%. But in June, Tesla's fortunes reversed, and in the beginning of July, the automaker released better than expected second quarter delivery results. Analysts are divided on whether Elon Musk's company can break out of its longer-term downtrend and grow again, but are agreed that second quarter results will be crucial. With this issue out of the way, most analysts believe this quarter's results will prove crucial in deciding whether the stock pushes higher or continues upon its downward path. With Apple, as with many other companies, its fiscal 2019 hasn't been looking good compared to the double-digit revenue and earnings per share growth it delivered in fiscal 2018. But investors will be watching out for comments from management about iPhone sales trends, even though Apple stopped giving exact figures on this. Apple's services have become increasingly important to its business. The services segment is now the tech giant's second largest business, and its revenue is growing rapidly. This is the segment that Apple wants investors to focus on, rather than its declining iPhone sales. So any sign of a slowdown will likely push Apple stocks lower, while beyond expectations services growth might mean that Apple will continue climbing. The other major factor on stock prices at the moment is interest rates. Investors are hoping to see 3 rate cuts by the Fed this year, but anything less than this may now disappoint investors. If we see more positive economic data coming out of the US over the next month or so, it will lessen the chances of interest rate cuts. On the other hand, this will boost the dollar. And of course, we at Fortrade will be following the earnings season and its impact upon stocks and other instruments very closely. So please do get in touch with the senior account manager if you have any questions or want to take advantage of the trading opportunities that this earnings season will present. Until next time, goodbye, and please join us at Fortrade again soon.